Hello, and welcome to Wall Street Trends. Today we're tackling a hot topic that's been on everyone's mind. Penny stocks to buy now in 2025. Penny stocks can be an exciting space, offering the possibility of significant growth for a relatively small initial investment. Of course, they also come with extra risk, and that's something we'll break down step by step. In this episode, I'm going to 1. Explain exactly what penny stocks are and why they're so risky yet potentially rewarding. 2. Address the major market fears in 2025, like rising interest rates, inflation, and global uncertainties. 3. Provide actionable advice on how to manage risk when diving into penny stocks. 4. Introduce you to real, publicly traded penny stocks that might be worth watching right now. And finally, give you some practical tips on how to do your own research, monitor your investments, and stay ahead of the market curve. If you're excited to learn more, make sure you hit the like button, subscribe, and turn on notifications so you won't miss any of our future episodes about stock market trends, hidden gems, and investing strategies. Let's get started. Understanding penny stocks. So, what exactly are penny stocks? The U.S. Securities and Exchange Commission, SEC, traditionally defines a penny stock as a security issued by a small company that trades at less than $5 per share. Although some people assume penny stocks means literal pennies, the classification technically applies up to $5. You'll find these stocks on the major exchanges like NASDAQ or NYSE if they meet listing requirements, or more commonly on the OTC, over-the-counter markets. Why do people love them? 1. Low cost of entry. You can buy a large number of shares with a relatively little capital. 2. Potential for big gains. Because these companies are small and often emerging, good news like a contract win, a successful product launch, or strong earnings can trigger dramatic price increases. But beware, with great potential reward comes high risk. 1. Volatility. Penny stocks can swing wildly in price, sometimes within hours or days. 2. Liquidity issues. It can be harder to buy or sell shares quickly, leading to bigger spreads between the bid and ask prices. 3. Less transparency. Smaller companies might not have the same level of public financial data or analyst coverage as larger firms. 4. Market hype. Rumors and speculation can drive prices sky high or send them crashing down. When you invest in penny stocks, think of it as betting on a promising startup, but one that still has a lot to prove. Current market fears in 2025. Now let's talk about some major market fears circulating in 2025 that impact all investors, but especially those looking at smaller, more volatile penny stocks. 1. Interest rates. Over the past couple of years, interest rates have been a roller coaster. The Federal Reserve has made moves to combat inflation by raising rates. Higher rates mean it's more expensive for companies to borrow money. Large corporations can often weather these shifts, but small-cap and micro-cap companies, like most penny stocks, can struggle if they rely heavily on debt financing. 2. Inflation. Inflation remains a concern. When prices of raw materials and labor go up, smaller companies can feel the pressure on their profit margins immediately. That can lead to slower growth or cost-cutting measures, both of which might affect a company's outlook and share price. 3. Geopolitical uncertainties. From supply chain disruptions to international conflicts, global tensions can cause investors to seek safe havens. Riskier assets, including penny stocks, might see decreased liquidity or sudden sell-offs if there's bad news on the geopolitical front. 4. Regulatory changes. The U.S. government and governments around the world may update laws about how certain sectors operate. Whether it's about biotechnology approvals, electric vehicle tax credits, or cannabis legislation, these changes can dramatically shift the prospects of small companies. 5. Market sentiment. Overall, the market's mood swings can be amplified for penny stocks. Fearful markets can result in steep declines, while euphoric or risk-on markets can see penny stocks surge. Keeping a finger on the pulse of market sentiment is crucial, so how do we navigate these fears and uncertainties? That brings us to our next section, actionable advice. Actionable advice for penny stock investors. All right, let's take a look at some practical steps you can take if you plan to invest in penny stocks, especially under these shaky market conditions. 1. Set a realistic budget. Decide on a certain amount of money you're comfortable risking. Penny stocks are volatile, so this shouldn't be money you need for necessities like rent, food, or emergency funds. 2. Diversify. Don't go all in on one penny stock, no matter how amazing the company appears. Spreading your money across multiple sectors, e.g. biotech, clean energy, tech, can help balance out the risk if one particular investment goes south. 3. Research thoroughly. Look for real news about the company, official press releases, 10K filings, and earnings reports. Don't rely solely on social media chatter or rumors. Investigate the management team. Do they have experience in their sector? Have they led successful startups or major projects before? 4. Use stop-loss orders and limits. Set stop-loss orders to protect yourself from dramatic drops. For instance, if you buy a penny stock at $1 per share, you might set a stop-loss at 80 cents. This helps minimize potential losses if the price suddenly dives. 5. Time your entry. Try not to chase a stock that has already surged 200% in a few days because it might be overheated. Look for pullbacks or consolidation phases as potential entry points. Of course, timing isn't everything, but it can help reduce the risk of buying at a short-term peak. 6. Stay informed. Keep up with overall market news, especially changes in interest rates, supply chain updates, or sector-specific regulations. These macro factors can heavily influence penny stocks. 7. Have an exit strategy. Know in advance if you're a short-term trader or a long-term investor in the penny stock. If you set a price target, be disciplined about it. When it hits that level, consider locking in some or all of your gains. Real penny stocks to watch, 2025. All right, you've waited long enough. Let's talk about some real penny stocks trading on major exchanges or OTC markets. Keep in mind that share prices fluctuate. Some might move above $5 or below $1 over time. Always double-check current quotes. 1. Exela Technologies. Ticker XELA. What they do. Exela Technologies specializes in business process automation BPA, workflow solutions, and digital platforms to help companies automate tasks like payments, document management, and data analytics. Why it's interesting? With the ongoing push towards digital transformation across all industries, XELA could benefit from companies seeking cost-effective ways to streamline operations. They have a global footprint and cater to multiple sectors, including banking, healthcare, and legal services. Risks. They carry significant debt, and the company has experienced management turnover. Persistent negative market sentiment or macroeconomic headwinds could make it hard for them to raise additional capital if needed. Market fear considerations. Rising interest rates can impact a company with high debt, so it's crucial to monitor XELA's balance sheet and future refinancing plans. Second, Sundial Growers. Ticker SNDL. What they do. Sundial Growers is a cannabis producer based in Canada, focusing on both recreational and medicinal products. Over the years, they've expanded into retail and have made strategic acquisitions. Why it's interesting? As the cannabis sector continues to evolve, legalization efforts in the US and abroad could open up new markets. Sundial has tried to diversify its revenue streams by entering different segments of the cannabis value chain. Risks. The cannabis industry is still finding its footing. Regulatory frameworks differ widely by region. If federal legalization in the US faces delays or setbacks, growth expectations for companies like Sundial might stall. Market fear considerations, geopolitical and regulatory uncertainties heavily influence cannabis stocks. Watch for legislation updates and keep an eye on consumer spending patterns, especially if inflation remains high. Ideanomics. Ticker IDEX. What they do. Ideanomics is a global company focusing on the adoption of commercial electric vehicles, EVs, and fintech solutions. They aim to facilitate fleet electrification, offer financing and leasing services, and integrate various aspects of EV tech. Why it's interesting? The EV revolution is well underway, and many smaller players are jockeying to capture market share in commercial EV fleet adoption, particularly in buses, delivery vans, and specialty vehicles. If Ideanomics can capture a solid niche or secure major contracts, the stock could see upward momentum. Risks. The EV market is extremely competitive. Established automakers as well as new entrants with robust funding could overshadow smaller firms also. Supply chain disruptions for batteries and components might affect production timelines. Market fear considerations. Inflation and higher interest rates can raise manufacturing and financing costs. Monitor how Ideanomics navigates these financial and operational challenges. Fourth, Senseonics Holdings, ticker SENS. What they do. Senseonics is a medical technology company that developed a continuous glucose monitoring (CGM) system, primarily for diabetes management. Their implantable CGM device can last up to 180 days, which sets it apart from traditional wearable sensors. Why it's interesting? The diabetes market is enormous and growing worldwide. If Senseonics gains broader FDA approvals, expands insurance coverage, and partners effectively with healthcare providers, their CGM product could see strong demand. Risks. The healthcare market is highly regulated, and product adoption can be slow. Competition from larger medical device companies like Dexcom is fierce. Achieving favorable insurance reimbursement rates is critical for widespread adoption. Market fear considerations. Healthcare typically remains resilient during economic downturns, but smaller companies can still face funding challenges. Keep an eye on Senseonics' cash flow and how they handle potential regulatory hurdles. Fifth, Zomedica Corp, ticker ZOM. What they do. Zomedica focuses on veterinary diagnostics and pharmaceuticals for companion animals. Their main product lines include diagnostic platforms that help veterinarians identify issues in pets more efficiently. Why it's interesting. The pet care industry has been growing steadily, even during economic downturns, as pet owners often continue to spend on health-related services. If Zomedica can expand its product range or secure partnerships with major veterinary chains, its revenues might climb. Risks. Product adoption might be slower than expected if vets don't see a significant advantage over existing diagnostic tools. Plus, competition from established veterinary product manufacturers can be intense. Market fear considerations. Veterinary diagnostics is somewhat resistant to consumer spending fluctuations, but if inflation persists and household budgets tighten, pet owners might cut back on non-urgent veterinary services. How these stocks tie into market fears. We've identified 5 penny stocks. Now let's link them back to those 2025 market fears. 1. Interest rates. Companies like Exela Technologies, XELA with high debt, are at higher risk if interest rates keep climbing. Monitor their balance sheet closely. Ideanomics, IDEX, dealing in EV financing, could also see changes in borrowing costs impacting overall profits. Second, inflation. Sundial Growers, SNDL, might face higher costs for labor, utilities, and raw materials if inflation remains high. Senseonics, SENS, might grapple with increased R&D and manufacturing costs, though medical technology may be somewhat shielded if consumer demand is inelastic. Third, geopolitical uncertainties. Zomedica, ZOM, might be less impacted by geopolitics directly but could feel supply chain crunches for specialized components in diagnostic equipment. Sundial could be affected by changing trade policies or supply chain disruptions for cultivation supplies. Fourth, regulatory changes. Sundial, SNDL, is especially sensitive to cannabis legislation changes. Senseonics, SENS, needs regulatory green lights for new product approvals. 5. Market sentiment. All penny stocks are prone to sentiment swings. If the market shifts risk off, these stocks could see disproportionate sell-offs. Conclusion. Thank you for joining me today on Wall Street Trends for our deep dive into penny stocks to buy now in 2025. We explored the basics of penny stocks, tackled current market fears like inflation and rising interest rates, and looked at real companies such as Exela Technologies, XELA, Sundial Growers, SNDL, Ideanomics, IDEX, Senseonics, SENS, and Zomedica, ZOM. Remember, these stocks are purely examples to kickstart your research, not endorsements or guaranteed winners. If you found value in this video, please hit the like button, subscribe, and turn on notifications so you'll never miss our latest content on emerging market trends, stock analysis, and investment tips. Also, let us know in the comments below, which penny stocks are you watching or investing in? What other topics would you like us to cover? We love hearing from our Wall Street Trends community, so keep those questions and suggestions coming. Until next time, happy investing, stay informed, and remember, informed decisions can turn uncertainty into opportunity.